Hello friends, in this video we're going to discuss about the changes in GSTR-9 and 9C which are applicable from 24-25. This has been notified by the government in the third amendments to rules 2025 from 17 September 25. Now the first aspect is with regard to table 6A. As we all know, table 6A contains auto-populated data for 12 months. So for 24-25, it would contain the auto-populated data from April 24 to March 25. Now, couple of tables have been newly inserted. Table A1 is now going to talk about the ITC of preceding financial year, which is availed in the current financial year, other than that which is reclaimed through table 37 and 37A. So the reclaimed ITC would not be shown here, only those ITC which are first time availed in 24-25, which is belonging to 23-24 has to be shown. So A1 is basically containing 23-24 ITC availed in 24-25. This option was earlier not available, but now this option has been newly inserted, where I can report previous year's data in the current year. A2 would be thereafter the net of A and A1. That means ITC of 24-25 availed in 24-25 itself. Now, table 6J talks about the ITC of as auto-populated as per 3B as reduced from the total breakup of ITC from forward charge, reverse charge, import of goods and all of that, which is being reported separately by us. This is table 6J. Normally, this would contain the difference of previous year taken in current year. For example, for 23-24, it was 22-23 availed in 23-24, assuming we have not reported it anywhere else. But now, this table is now going to differentiate from A2. What is A2? In the last slide, we have discussed that we are going to remove the effect of 23-24 availed in 24-25. That means table 6J ideally now should be 0, because table 6J is only the difference between I and A2. I is basically the aggregate of ITC of 24-25 availed in 24-25. A2 is basically the differential if I reduce the effect of 23-24 from my total ITC availed in 3B in 24-25. So as I said, this is going to be ideally 0. This will now not contain the effect of the previous financial year's ITC taken in current financial year. 6M. 6M earlier was any other ITC availed but not specified. But now we have understood that 6M, there is no requirement of having a residuary clause. Rather, what they have stated here is ITC can only be availed either through 3B or through these forms, which are ITC 01, 02, 02A. So 3B and Tran1 forms have a separate place to report, but ITC 01, 02 and 02A are basically going to be reported here. So all of this, basically if I am going from exempt to taxable supply, or I am transferring my business, all of that, if I am taking any ITC, would be reported here. Now this is important. There was a lot of confusion regarding ITC which I am reclaiming. So particularly nowadays when ITC is being claimed through 2B, I am taking my ITC through 2B in 4A5. If it is not appearing in my books in the current year, I am reversing it in my 3B in 4B2. Thereafter, whenever I am reclaiming it, I am reporting it under 4D1 as well as 4A5. So now what they have done is, they have said table 6B is only going to contain ITC which is availed for the first time. That means if it is reported in 2B in this particular month, and I have taken it in this month because it is there in my PR also in this month, purchase register also in this month. So 6B will only contain those details. 6H is now going to contain the details of the reclaimed ITC. That means something which I had reversed in the previous month, but which I have claimed in the current month. So any ITC which I am claiming in the current month, if I had reversed it earlier, that 6H I would be showing it. So July month's ITC I have reversed in July and then reclaiming it in August. So in my August it will go in table 6H, right? Now table 8. Table 8 contains the reconciliation between 2B and 3B. So what I need to do is, now I need to reconcile between 8A, which is talking about 2B, and 8B, which is 6B and H. Now they have what they have done. As per 8B, they want to take figures only as per 6B. They will not be taking figures as per 6H. That means whatever is the gross ITC availed, whatever is my gross ITC availed in table 8B, in my table 6B, before performing reversals in table 7 or table 4B, and before identifying the reclamation, all I have to do is take the ITC as per 2B completely. So basically my 8B should be equal to my ITC as per 6B of GSTR-9, which is basically ITC claimed for the first time in forward charge before performing any reversals. So ideally this difference should always be, in maximum cases it should be 0. Why should it be 0? Because when I am taking ITC as per 2B and I am reducing my ITC as per whatever I have reclaimed, whatever I have reversed, and reclaimed ITC is there in table 4A5. That 4A5 reclaimed ITC I am showing in table 6H in my GSTR-9, and table 7, whatever ITC I have reversed, that is taken from 4B2. So in other words, my 6B is equal to my 2B in a way. Ideally, this difference should be always 0 in a way. Annual return for table 7. For table 7, 7A to H was what I was reporting earlier. A1 and A2 are the new tables which have now come in. A1 is as per rule 37A, whatever ITC I am availing. That means if I have made the payment to the supplier and the supplier has filed his GSTR-1, I have taken ITC as per 2B. But later he did not file his 3B. That reversal needs to happen in table A1, rule 37A. So that needs to be reported here. So whatever payment has not, so in a situation where supplier has filed 1 but not 3B, that ITC I should be reversing as per rule 37A, that needs to be reported here. A2, as per rule 38, that means whatever ITC is there in rule 38, I have to report it here, which is for banking and financial institution, 50% reversible ITC. So A to G would have couple of new tables getting inserted. Table 8H. Table 8H is talking about reconciliation between ITC of import of goods. Import of goods is basically where I have to reconcile between IGST paid versus IGST credit availed. So 8H now needs to contain only the IGST credit which is availed in the current financial year. 24-25 ITC availed in 24-25, and H1 is containing the details of ITC which is availed in the next financial year. So 24-25 ITC availed in 25-26 is what I need to report it here, right? Ideally, G is basically IGST paid minus H plus H1. H is basically IGST paid in current financial year. H1 is ITC availed in next financial year. So tax paid for import of goods which is in G should be equal to ITC which is availed in current financial year plus the next financial year. Of course, this may not be equal if the IGST credit on import of goods itself is not available, then tax paid would be higher than the credit availed. So this is basically reconciliation between import of goods, tax paid versus ITC availed. Next is table 9. Table 9 is basically tax payable versus tax paid. So if you look at the earlier tables, it used to be only from 1 to 7. Now there are couple of new columns which have been inserted, column 8 and column 9. So tax payable is what according to us is supposed to be paid, was supposed to be paid as per GSTR-9, and we are reducing the tax which has already been paid through cash or ITC. So 8 column 8 is basically the actual tax which has been paid. So 2 is basically tax payable as per 9. 2 to 7 is basically, 3 to 7 is basically the total tax which has actually been paid. And column 9 is basically difference between tax payable and tax paid. So column 2 tax payable minus column 8 which is tax paid. I have to identify what is the tax which is supposed to be paid. Now this is quite interesting. There may be a genuine difference for tax of 23-24 paid in 24-25. Why? Because here in this tax payable figure should ideally be borrowed from my tax payable as per GSTR-9 part 2, which is outward supplies. Part 2 outward supplies should only be with regard to tax of 24-25 paid in 24-25. 23-24 paid in 24-25 effect needs to be removed. So in other words, tax payable is 24-25 paid in 24-25, whereas 3 to 7 is basically tax paid in 24-25, maybe for earlier financial years. So there may be a difference which is there in column 9 because of this reason. Table 10 to 13. Table 10 to 13 is basically tax of 1 year paid in the subsequent year. So 23-24 annual return, if I was filing, whatever I have done in 24-25, I have to report. Similarly, for annual return of 24-25, whatever I have done in 25-26. There has been a slight change in language here, but I believe the effect still remains the same. Basically, this is talking about amendments of 24-25 done in 25-26 upward. This is amendments of 24-25 downward amendments. Debit note, credit note amendments, all of that would be reported here. Now 12 is basically they have corrected the language which was not clear. Basically ITC of financial year reversed in next year. ITC of financial year availed in the next year, which is the correct language. Earlier the language was quite confusing. So because of that, a few people used to make mistakes in reporting, which has now been corrected in table 12 and 13. Table 14 is basically tax payable minus tax paid. So payable, paid, and now there is a column for difference, which was not there earlier. Ideally, payable should be equal to paid in every case. Now 9C. 9C table 7 talks about reconciliation of taxable turnover. Now table 7A is the total turnover from which I am reducing all the supplies on which tax is not payable. And D1 is basically supplies on which tax is to be paid by e-commerce operator as per 9.5. So 9.5 supplies will be reported in D1, right? So supplier would be reporting the 9.5 supplies in D1. So if I am making any supplies through e-commerce platform, in that case, I will be reporting it here because I will not pay the taxes, e-commerce platform will pay the taxes. So that will be reduced from my taxable turnover. Now, when I am making reconciliation, what I would be doing is reconciliation of tax paid. There is a separate place. So this reconciliation of tax paid has now got a separate column, separate row, which talks about where e-commerce operator is required to pay taxes as per 9.5. So e-commerce operator will be reporting as per K2 whatever taxes they are paying on behalf of the supplier, because this is their tax paid. Till now this was not part of their turnover, so it could not be reconciled. Now they would be adding it as part of tax paid for reconciling it with their actual tax payable. Also there is a change in language. So table 9Q used to talk about total amount paid as per annual return, whereas it borrows figures from the column of tax payable. So they are borrowing from tax payable, which is column 2, which is tax payable. So here they have changed the language from paid to payable, which is right. Now table 11. Now this is interesting. Earlier one could pay taxes in 9 and 9C only through cash. But now they have also allowed, if my tax was supposed to be paid which I have not paid, I can pay it through both cash or ITC, which is a good and a welcome move. Which is a new thing which has been inserted. Also for 9.5 supplies for e-commerce operator as required in table 9, table 11 also has been amended. Similarly, Part 5, additional reconciliation, additional liability due to non-reconciliation. 9.5 supplies have also been amended, and Part 5 basically, which talks about the total liability payable as per 9C, also has been amended to provide e-commerce 9.5 supplies, which is required to be paid in certain cases. Also, additional liability due to non-reconciliation may arise with regard to late fees. Earlier, there was no late fees which was for 9C, but last year they have prescribed late fees for 9C also. So that late fees which is prescribed for 9C also has been inserted as a new table, table 17 in GSTR-9C. With this, we come to the end of this session. Thank you so much for giving me a very patient hearing.